Okay, so what kind of situation you are facing?
No, first of all, while taking a stock market, first of all, I'm taking a chart. I can't mark the first high, low. I'm having difficulties to mark the starting stage, starting my high and low.
Okay, on Nifty or Bank Nifty?
On Nifty, on Nifty.
Okay. Okay. So this is a 1 minute chart, and you can mark any time frame, whatever you like. It's up to you. Like 5 minutes, 1 minute, 15 minutes, 1 hour, the same process.
Okay.
Mhm. And in a 1 minute, you will get more like mapping structure like this.
Okay.
Okay, so what kind of means a problem you are facing to marking the structure?
If
Yeah.
just no, from where can I start? No, I just don't know how to start the first low or first high.
Okay. So this is our live, right? So
yeah,
and this is our live price action is here. So if we wanna start marking the structure, then which level we should start, right? So we can start from bottom. If market momentum is a bearish, then we can start from the top, right?
Okay.
So right now, and this thing apply in every time frame, not a 1 minute, and you can forget time frame. You focus on structure, right? Because same thing apply in a 1 minute, 5 minute, and 15 minute, 1 hour also, right?
Okay.
So in this case, look at this one. This one, our lower low, right? And if I mark this lower low, so before to marking this lower low, I need to mark where is our last break of structure, correct? So in this case, this one is our low because this is our actual move to the upside and this is our internal range, right?
Yes, yes.
So here, actually here, right? So this one is our lowest point, which broke by this move, right?
Okay.
It's a simple process. And where is our high? This one, right?
Okay.
So technically, yeah.
Can I ask anything? Only one thing. You have marked the first low, right? That first low you have marked now. Means left side. You have marked the location, right? Yeah. This point you didn't mark regarding that inducement. You just marked. It's a break of structure, so you marked the low as it is, right?
This lower low market because this low broke this move.
Okay. Not taking
this one, right? Because this low broke
here.
here.
It is not regarding taking. Yeah. Okay. Fine.
Yeah, because market momentum is a bearish, so inducement will be like here, right? Because market is a bearish, so inducement will be left side, right?
Yes, yes.
So this is our lower low and this is our lower high. Market push downside, break this structure, and this one is our break of structure, correct? And this is our break of structure. And we know when market momentum is a bearish, so we can sell after taking out the inducement, or we can sell after taking out the engineering liquidity, or you can say extreme liquidity, which is available on the extreme, right? Yeah. Okay. So in this case, what happened here? Market taken out this inducement, which one is here?
Yes.
Okay. And this one is our inducement, and this one is our lower low, correct? And after that, what happened? Market push higher, and we can sell only two POI. First one on the like taking out the inducement, and your order block can be here and here also, right? And the extreme one here.
Okay.
Right. And this one is our engineering equity, you can say, correct?
Okay.
And after that, what happened here? Market actually.
Can I ask something?
Yeah.
That is, in between these things, there are some swing lows are there, right? So we shouldn't take anything. What is that? What is that all? We don't need to take anything there.
Actually, only two POI actually work. First is after taking out the inducement, and second on the extreme. If there is no extreme available, For example, okay. So we can sell also after taking out the high. Okay.
Okay.
And you can mark your PY order block using your order flow, that where is order block is valid or not. If you mark the order flow is here, right?
Yes.
This one is unmitigated, right?
Yes.
And
Yes.
if you can see, this one is mitigated by this move, and this is the last buying move before the drop. This one is already mitigated.
Yes. Yes.
Everything is mitigated here, right?
Yes. Yes.
Everything is mitigated, and this was unmitigated. That's why I marked this as a right. So
Okay.
probably press tab here, and then we can sell. So everything is mitigated. So we have only two PY. First one is here, and second on the extreme. Correct.
Okay. But first one is not it is mitigated, but it didn't give any reaction, right? It just gone straight.
Yeah, it's a probability. It's because the this is a decisional PY, because sometimes it works, sometimes it's not working. There is a 50% chances, but extreme is a high probability in like most of the cases, right?
Okay.
So tap here. If like for example, this one is your higher time frame structure, so you can sell here into lower time frame confirmation after change of character at this point. You don't need to sell directly here, but on the extreme you can sell directly, because those area is a extreme one, right?
Okay.
So this is a decisional market go higher, and market taken out the previous measure high and taken out the liquidity, which is an indication that market taken out the external liquidity. External liquidity means measure high low, which one is here, correct? And these our measure high low, market taken out this high, and we can sell here after change of character, and then we can, like this one is our lowest point is here, right? For example, if market open here below it, okay, and break this low, right? And then we can sell after taking out the minor inducement, and we can sell for the downside till this low, right? This scenario will be happen, and in between this higher low, this is our internal structure. Hello. Hello. Hello.
Hello.
Yeah. Can you see
One second,
my screen?
I can't see your screen. I can't see your screen. Yeah.
Okay. Now you can see.
Yeah.
I think your voice is stuck.
Now it's okay.
Okay. Hello.
But your voice is little.
Yeah, actually.
Now is it okay?
Yeah, actually, as I mentioned that the network issue since last 3 days. That's why.
Okay. Fine.
Because heavy rain in my side. Okay.
You are from which state? You are from which state?
Yeah. So this this portion is clear to you?
Yeah, it's clear, but only one question is, only if it touches the POI and then it reverts back, then only it is called CH, right?
Mm-hmm.
Or else it is not CH.
Yeah, you can continue.
No. The question is, if it touches the extreme POI, the extreme point, it touches extreme point, and then it takes the inducement. So this is called CH, correct?
Yes.
And if it is done if it is done in between, then we shouldn't take it as CH.
That's called inducement.
That's called inducement. Okay.
Yeah. only price tap on the POI in a buy side or sell side, doesn't matter. When market break the first recent high or low, that's called change of character. But in between the POI, if anything happen, break the high or low, that's called inducement. Simple.
Okay.
Okay. Okay. So after that, the next question.
Next question. How to mark major and minor structures?
Okay. So in a Nifty, what type of you are trader? Like day trader, swing trader, positional?
I'm a day trader.
Okay. So right now, which time frame you are following?
15 minute.
15 minute as a higher time frame and 1 minute for entry, correct?
Yes.
Okay. So as a in a stock market, especially for the Indian stock market, Nifty and Bank Nifty, so we should use 5 minutes for the higher time frame and 1 minute for entry, because the 15 minute is a very larger time frame and it's take a lot of time to break the structure, come back to the POI and then wait for the lower time frame confirmation. But you can use 15 minute higher time frame in a stock forex market, because forex market open 24 hours and Indian stock market open for few limited hours only. Okay, so we can use 5 minutes for the higher time frame and 1 minute for the entry. Okay. So if I explain here like a 5 minute structure.
Yes. Okay.
So we can see market push drop top to bottom and bottom to top is arising here. So if I mark structure is here, first of all, then we can understand more better and clear to you. So let me delete this one first. And this was our high, which one taken out, this one. And this high taken out by this move. This is an inducement. And higher high is here.
So high is confirmed. Yeah.
Okay. And whereas our lowest point is here, right?
Okay.
So technically, this is our structure is here. And what happened here? Market break the structure into downside, and this is a convert into, because market was bullish, and convert into bearish, right? After this change of character, this is our change of character, because this is a sweep the liquidity in a daily time frame. If you know that daily time frame candlestick sweep the major high, and when market taken out the previous major high, although that's also called a change of character, because when market sweep the major high or low, means swing high or low, that's also work as a POI. Okay. So this is a change of character. And after that, what happened here? Market continue falling into downside. And now we can see where is our inducement in this leg. In this leg, if you can see, this is a minor inducement. Which one is here? 2. And we can use minor inducement to confirm the lower low and higher high in a structure, right? Like here.
Okay.
So this is our lower low, market push higher, right? And again push downside. And this one become our new break of structure, which one is here. Okay. And this one is our lower high. Again, market push downside. And then what happened here? You can see this one is our lower low, right? Because market taken out the inducement is here. And this one is our lower high, and this one is our break of structure. And you can see here at this point, market just sweep the liquidity in a first attempt, but in the next attempt, market close below it is here. So our structure confirm here when price close below it. In the first attempt, this is not a break of structure, just sweep the liquidity, right? And this one become our new lower high, because market taken out this inducement, correct? And after taking out
can
this,
I ask one thing? I have one doubt.
Yeah, sure.
1 second. No, take it here. And you're saying that, I'll just annotate it 1 minute.
Sure.
You're saying, right? Correct? This is the inducement, but why are you saying only this as a structure? Oh, why can't this be a structure? Because this is also break off, right? Why can't this be a structure? Only why are you saying this is only the structure?
Actually, if you can see here, this is a pullback, like valid pullback is here. And if you know, valid pullback only identification in a bearish market when candlestick break the previous candle high, that's called valid pullback. In a bullish market, when candle break the previous candle low. Okay, so in this case, you can see market break the previous candle high at this point, which you mark also.
Okay.
Is here, right? And then continue pushing downside, right? And this is a slightly broke here also, so we can also use a mark. This is also inducement. Okay. So this is our inducement, and after taking out the inducement, we can sell, right?
Okay.
This one our break off structure, and this is a confirm. And now we can see market continue pushing downside. After that, what happened here? Market break this high, and that's called again change of character, because major structure broken here and close of it. If market just sweep the liquidity, so this is not a break change of character. Market must be close above or below it to confirm the change of character. So this one is our change of character. Again, market push higher, and now we can see in this leg, this one is our minor inducement. Probably here also, yes, at this point, because this is a pullback and then market go higher, right? So we can mark this is our higher high at this point. Again, push downside. After taking out the inducement, we can mark this is our break off structure.
Yes.
Again, market going higher high, right? And now we can see market pushing higher high, and at this point we can see market taking out the minor inducement is here. If you notice, this is a pullback. Let me zoom this one.
Yes.
Now you can see.
Yes.
Now this pullback and then market go higher. So this one is a called our confirm the higher high, which point? This point. And then what happened here? In the next attempt, market taken out this high, but did not close of it. So we can switch our high, transfer this high to this point. Yeah. Okay. And then what happened? Market push downside, and our inducement also will be transferred here to here. So this one is also taken out. So right now we have a range. This one is a break off structure to the upside. Right, again go higher and push downside, and after this one, where is our inducement in this case? So this one, because this candle broke the previous candle low, right? So this one is our inducement. And after taking out the inducement, probably we are looking for the buy right here. Okay, and then what happened? Market go higher but unable to hold this zone, and finally broke the major low, which one is here, and this is our lower low, higher low, and higher high. Broke this one, and this one is a called change of character. And again market push downside, and same story will be happen like this. Okay, because 5-minute structure change time to time, a lot of because market never follow any single time frame, you know. And sometime like 5 minute is going like 2-3 moves. After 3 moves, probably market give a reversal most of the time. Okay, so probably you can see 2 and 3 continuation. After that, you can see a reversal like change of character, because something like your change of character is happen for the next higher time frame as an inducement. Okay. For example, this is a change of character in a 5 minute. So this can be your 1 hour inducement, right? Yeah. So same process will be happen here. After that, market break the structure and market continue pulling downside. Lower low is confirmed here. Taken out the inducement, break the structure, taken out the inducement, again push downside. So you can mark like a break off structure, mark the order flow, then you can refine your order block, and then you can take entry. And this is if anything happened between the major high or low, that's called internal structure, like here. right? This one is our internal structure. These are internal structure, right? This is a very minor structure is there. These are all internal structure.
We can't take entries in internal structures.
We can take an entry in a 1 minute, like in this minor structure is also, but you have to remember that where is our higher time frame PI. One price step on your higher time frame PI, like 5-minute PI, then you can stack multiple position in a 1 minute.
Okay.
Like here, for example, here, right? Break the structure is here, push downside, and after this one, when we can add multiple position at this order flow, right? Because everything is mitigated here. You can see everything is mitigated. So only this point is unmitigated. What happened here? Market tap here, and we can sell into 1 minute, right?
Okay.
Again, break this low, and after break this low, this one is our minor inducement is here, right? Because market taken out the previous candle high at this point. Right. So what happened? Taken out this one, and then market tap on this PY, and you can add multiple position here into 1 minute. Again, break the structure is here, and after break the structure, you can apply same thing is here. This one is our inducement, and after this inducement, where is our PI when we can sell? Only two zones are valid for the sell. First thing is here you have to mark the where is our last buying move before the drop. So in this case, you can see this one is a last buying move before the drop.
Yes.
Right. So you can sorry. I'm sorry, what happened? Okay, so this one is here. You can see how smoothly tap here on the our POI order flow, and we can stack multiple position here for the sell till this low. Which one is here? Correct.
Okay.
So you can, and I want to mention one more thing is here how you can add multiple position like here. So you can use like when candle break the previous candle high, then we can add multiple position is here. Like this is a called single candle mitigation entry is here. Right.
Okay. After single candle, we have to take entries, or should we wait for mitigation? Any other mitigation?
For the single candle mitigation, if market taken out the previous high and close below it, like this one, right? In these three example, you can see market close below here, right? Here and here. So we can take based on the single candle mitigation, because when market, like when candlestick taken out the previous candle high and close above it or below it, it means liquidity taken out. Order block is not necessary. Order block is our secondary confirmation. Like refinery, you can say order block is not SMC also part. Order block we use for the refinement. For example, here, if you can see here, this is our like order flow. Okay, you know, this is our last buying move before the drop. But if you mark the order block, where is our order block? This point, and this order block is not mitigated, but market push downside. Why? Because market follow the order flow and structure. Okay, main thing is a liquidity. Okay, market need a liquidity, and then market push downside. And what kind of liquidity? If you can see, this is our trend line, and trend line broken, go higher and push downside. A lot of people are looking here for buy because this is a trend line, correct? And you can see one more thing is here, SNR liquidity, like supply and demand is here. A lot of people are buying here, expecting price go higher. They push higher, but then what happened? Market failed and then push downside. So these things happen most of the time with retail traders. And you can see again, right?
Okay, but I have one doubt. For order flow, we should we need any inducement below any order flow? Should we need any inducement?
Yes, for the order flow, we need inducement. Without inducement, we can't sell on order flow, order block, or anything. At least taken out the liquidity, taken out the inducement. Inducement is a part of the liquidity. You can say first part of the liquidity is called inducement, simply.
Okay. Fine. But another one is if you are marking an order flow, but it would be a higher time frame order block, right? This portion will be a higher time frame order block.
This can be a pulse. Yeah, possibly.
Yeah. Sure. Okay.
And one you can use one more thing, like if every order block, like if every order flow is mitigated, then you can use various our uh, unmitigated order block. Like for example, here everything is mitigated, but this one is unmitigated. For example, this one is also mitigated, so we can refine where is our unmitigated order block, right? In that case, okay. For example, here in this case, you can see this is an order flow, this one and this
Yes.
one is here, and this one, everything is mitigated, right?
Yes,
Right,
yes, yes.
you can see everything is mitigated, but price push higher, right? And then how and when we can sell? We can sell on the refinement of the order flow, like sorry, refinement of the order block. Where is our refinement order block? Where is a proper imbalance, and when we can sell? And second thing is here, you need to mark like 2-3 things you need to understand. Like this is a trend line, you know very well. When market push higher, so you can wait for the change of character for the sell. First thing, when market taken out this one, and you can sell after change of character. Which one is here? This candle taken out the
Okay.
liquidity, and we can sell here also at this point, right? If there is everything is market, no need to worry, you can sell here, right?
But now you're saying that you can. This is a change of character. You have marked a place and it's called change of character. You're saying, but does it hits any order block? I mean, any order block there? Any POA zone?
Actually the for the this one, this if any every order block is mitigated, right? So you don't need to wait for the mitigated order block, or we need main thing is a liquidity, and that's can be your inducement, and this can be a trend line, and SNR liquidity and liquidity sweep. It doesn't matter. As I mentioned, that order block we use for the refinery purpose, right? If you can see top to bottom, lot of order block is here. First one is here, right?
Yes,
And
yes.
second one here. What happened? I think some internet issue again. Okay. At this point, right? And this order block is here slightly, right? And this one is a mitigated, and this one is a mitigated. So there are a lot of order blocks. So which order block we should use? We use unmitigated order flow order block, but every order flow is already mitigated. Okay, so we can't take a decision as per this order block, because every order block is mitigated, right? So we can take NT after taking out the inducement, after taking out the liquidity, we can sell, right?
Okay. 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 And I have one another doubt. That is, if for you told me that for day trader you can take only by 15 minutes, right? In your code, you have mentioned that as a day trader you start with 15 minutes as higher time frame.
Day trader for the in a forex market we can use 15 minutes, but for the stock and bank nifty and based on trader we can use 5 minutes as a higher time frame and 1 minute for the entry.
Okay, but if I need to know the overall bias, from which time frame can I start? If I am a swing trader,
you can see daily time frame, and
okay,
and daily time frame you don't need to see that where is our overall break of structure or anything. We can use simply that overall trend direction. What is trend direction? Like bullish and bearish. So we can use previous day candles high or low, which act like a liquidity. Sometimes you can see market taken out the previous candles high or low, and then market push higher, right? So we use also,
okay.
and I think as I mentioned, I think you are not in a Hindi one. So I uploaded a video in a Hindi that how we can use the previous day candle high or low act like a liquidity, because when market taken out the previous candle high or low, let me show you exactly, then you can understand more better, clear, right?
Yes, yeah.
Which will more helpful to you also. And at this point is also mentioned that market will be go higher. Look at this one. When market is a bullish or bearish, like if I start here, like this is a bullish market. Okay, let me clean this all thing. This is our bullish structure is here, and you don't need to wait for the chalk pause or anything in a daily time frame. You need simply marking that the bullish market or bearish market, and bearish and bullish, right? Simply. So we can see on the bottom of the structure, if market previous candle low high sweep, so how we can take NT. For example, here at this point, This candle low is here, but close above it, sorry, close below it. So we can't sell here or buy here. When market is a higher high, like in this case, there is no high low sweep, but at this point we can see market sweep the high. So when market taken out the previous candle high and close below it, so next day we can sell. Okay, in this case market push higher because this is a reversal zone, right? But when market taken out the previous high and close away below it, so we can sell on the next day, looking for sell at this. Okay, and this is a not a candlestick we use because this is an inside wire between this measure high or low, right? The next day, what happened here? Market push downside, and in this case we can see market taken out the low. When market taken out the low, next day we are looking for the buy is here. Okay, so we can understand when we see that which is what is the candle, previous day candle, we can expect what happening today. Okay, and it's not give you everyday setup, but most of the time give you this type of setup. Market push higher. In this case, there is no candle sweep here. Market push higher, and then we can see finally at this point, if you can see slightly broke this one, but this is not valid as per this one. If market taken out this low and close above it, so we can again buy here. Okay. And if market is a bullish, if market sweep the previous candles high, which will give you a short-term pullback to the downside. If market sweep the previous candle low, which will give you big momentum to the upside because structure is a bullish, right? Yes. So at this point, we can see market taking out this low and close of it. So we can buy here on the next day, right? And same thing happening here. You can see taking out this low and then go higher, but sweep the high. But when market sweep the high, we can sell for the short term because major trend is a bullish. But when market taken out the previous low, we can buy for the longer term because major trend is a bullish, right? We can see continue. There is no another opportunity at this point. We can see one more opportunity is here. Sweep the high, and we can expect to the downside move. So same thing happen here. Every time we can see different.
Okay, so in higher time frame, we don't need to mark our BOS, CHOCH, and we don't need to mark the market structure.
Yeah, simply.
Mappings. Okay, fine.
And this type of things more work if this type of thing more work when priced up on the order block or any like fixed level, certain level, like a sweep, liquidity sweep, or any PY order flow order block, and then market sweep the previous candle high or low, which work more higher compared to the normal. Like this is a normal, but when type on this order block, order flow is here, right? When press tap on this order flow, sweep the liquidity, so we can expect momentum to the upside, right? And in this case, like here, this I think in a bank Nifty chart, market sweep the major high and sweep the high, so we can sell into downside. So you have to you can keep in your mind that when price tap on the order block, order flow in a higher time frame, and then previous day candle high low sweep, then we can expect bigger move, right? Because we are day trader, we need a few points for the buy or sell.
Yes. Okay, and can you explain what is liquidity wide?
Liquidity
wide. Yeah, liquidity wide. I've seen you in some YouTube videos that you have mentioned liquidity wide, but I can't understand what it is.
Liquidity wide, I don't know. What are you saying exactly?
No, you have mentioned in your YouTube videos, so that's why I'm asking.
No.
Okay, fine. Okay. And can you explain flip and difference between flip and CHOCH?
Flip entry.
Yeah, flip entry.
Okay. Flip entry module like this, you can understand. For example, here, price type on demand zone, right? and this is your already mitigate on your PY zone, for example. Okay.
Yes.
And then what happened? Market tap on the recent demand zone like this and give a reaction and then fail. Okay.
Okay.
So this demand is here, convert into supply is here, and here we can see another supply, and then we should wait for the mitigate this one, and then we can sell. And this is called a flip. Flip means demand convert into supply or supply convert into demand.
Okay. But in this case, should we wait for our order flow or should we wait for order block?
Both. We can use both.
Okay.
Okay.
Okay. And so there are lots of demand zones, right, in bottom. So every demand zone act as a flip.
No, but when price tap on the demand or supply zone, and the recent demand or supply act like a more high probability compared to the remain rest demand or supply.
Okay. Fine. And you said that for lower time frame, we don't need to check on into CHOCH like candle close or not, right? For 1 minute, need to check for a candle close for CHOCH, right? But in 15 minutes, in 4 hours, we need to check on to the candle close for CHOCH, correct?
Yeah.
Okay. Only for 1 minute lower time frame, we don't need to check for candle close. Just a wick is enough, correct?
Yes, exactly. Because in a 1 minute, we need to take aggressive entry. So if we wait for the candle closer, so price can be like a drop or up without our entry. Okay.
Okay. And Mr. Khan, I have only one doubt, that is that I'm a little bit confused in your type 2 entry regarding type 2 entry. Type 3 liquidity sweep is okay, and type 1 after hitting a pullback. Yeah, that's also okay. Type 2 entries only, because I can't understand, because it's we'll not touch anywhere. So how can I take that entry? Can you explain only type 2 entry?
Sure. Actually, a type 2 entry is after taking out the inducement, and
yes.
Let me show you exactly that. For example, here. For example, this one is your inducement, right? And price close above it. For example, I don't think. Yeah, close above it, right? So close above it, and this is our inducement for the higher time frame. And how we can take entry? We can simply take the same process, follow the same process, change of character, right here, right? And then wait for the like flip or chalk, and then we can sell here also, right? But why we are selling here when price above close it? Because this is our inducement for the higher time frame, for example. Okay. So when price taken out the inducement, it doesn't necessary that price will be tap on your order block or not, because main thing is the inducement. We are taking risk here for sell because market taken out the inducement. This is a simple. Okay. And I will add more stuff in our community in upcoming weeks. Trading Hub 3.0 coming soon, and I will add a lot of new high value topic in our content, and which will be released 1st January, right? And so there are a lot of things will be added, and few minor correction and errors in a 2.0 will be correct them and update, and after that I will make it. Okay, so no need to worry anything.
Okay, Mr. Khan. Okay, fine. So these are all my doubts, and I got cleared. Thank you.
Okay.
I have some pullback photos. I have some pics. We have just took some screenshots regarding the pullback, inducements. I'll just send you. Tell me which is all the pullbacks and which is are not.
Sure. You can ask me, and you can share on my on Telegram also, I will and Discord also. Then I will. Yeah. Don't worry.
Yeah. Okay.